So Tesla has managed to run up massive coming into earnings here, but now we're seeing Wall Street folks start saying that there may be a better opportunity in a different EV company altogether. So why is Wall Street looking to an alternative to Tesla? And more importantly, what does it mean for Tesla stock? Oh, let's talk about all that today. Let's get into it. Let's get you all the details right after you hit that like button if you like getting the truth out the hype, guys. I know it's Tesla's earnings time. It's time for the hype trains to all leave the station and all the bears to come out and just say it's going to be a disaster and everybody else in between. Let's just get down to the straight truth with this. So, make sure you like the video and subscribe if you like that sort of content. So remember, for those of you guys that are Mastermind members, we're going live tonight for Tesla's earnings call there in the Mastermind section of the group, which I may have left something special down there for you guys in regards to earnings season, but you got to check out the pinned comment, see what's going on there. But in regards to this video, we have to talk about what's going on with Tesla and more importantly, what's going on in the minds of Wall Street, guys. What are they thinking? Are they giving us some clues as to where Wall Street may be heading in regards to the EV race moving forward? So let's break it down piece by piece here, and I'll tell you exactly what I think and exactly where I think Tesla stock is heading in regards to all this action around it.
Oh, sorry, I got Tom White with me in studio, and we've got Anthony Sassine from Crane Shares joining us, senior investment strategist, as we talk about EVs and Tesla being the focus. What's kind of your baseline for Tesla this week, Anthony? Good to see you.
Hi, good to see you, Oliver. Well, I think probably Tesla will end up beating expectations slightly, but I'm not sure if that's going to help the stock, right? So we saw the numbers coming out end of June at 444,000, slightly above, but they're still down 24% year over year. So that does not bode well for Tesla, especially when their rivals like BYD, NIO, Zeekr are actually hitting new records in quarterly or monthly sales. So definitely there is a little bit of a sales problem here for Tesla, and that's we expected that to happen because of Tesla's delay for the lower or cheaper car, the $25,000 car, which haven't been produced yet. So Tesla today is at a little bit of a disadvantage here because of that. But there are some other positive notes within Tesla, Oliver.
All right, let's talk about, we'll get to the positive notes here in just a second. Let's talk about what he just said in regards to earnings. Yeah, I don't necessarily disagree. That could very well be the case in regards to how these earnings shake out there. Obviously, with the year-over-year numbers being down and with some of the other Chinese automakers specifically numbers being up year-over-year, definitely is kind of a divergence there. I'm not sure if that's necessarily directly due to the the fact that Tesla hasn't released the Model 2 yet. It's not like that was due. We were hoping for the announcement this year, not necessarily production and being out there at scale in order to swing these numbers the other way. So I think that's kind of more just a Wall Street narrative than it is anything else outside of that there. But that's not unreasonable to say in regards to Tesla, even if I kind of disagree with what's going on there. The more important piece is, what are those EPS numbers going to come in and look like? What are some of the other numbers going to come in and look like? And more importantly, what is that guidance moving forward? Is Elon going to change guidance or not in regards to Tesla in terms of not just deliveries, but margins, EPS, all those sort of things like that? Obviously, anything new coming into the pipeline. Is he going to wait till the event? Is he going to give us some tidbits earlier? All kind of unknowns there with Tesla. Again, we covered it in this video right up here. Check that out if you want my full preview for Tesla's earnings.
The renewable energy installation surprised also towards the end of June. It doubled from almost 3.54 gigawatts to close to 9 gigawatts. This was big news for the stock, and I think that kind of drove the stock a little bit higher before we heard from President Trump his new stance on EVs.
Okay. And how will that affect Tesla? Some have argued that it would be positive if it hurts the competition more. Is that kind of where we're at?
It could be in a way. It's going to definitely reduce demand, because the EVs are going to be more expensive in general. But Tesla is definitely the leader here, and by a big margin. It could, but that's certainly negative for the whole industry. But we saw a little bit of a change of tone from the ex-president over the weekend. So hopefully that carries out into his new administration, into favorable policies that doesn't certainly hurt the EV or the renewable energy industry.
So I'm not going to run down the politics rabbit hole here. You guys know my stance on that sort of stuff. I just don't do it. In regards to this, if there's some sort of EV credits go away, something else that may be more of a help to legacy automaker versus Tesla. How does that affect the EV race? Well, at least here in the US, I felt like it's been a one horse race the whole time. We're already seeing legacy auto, some of them just completely drop out altogether, basically saying, hey, we're not doing EVs altogether. So, in terms of it affecting the competition or giving Tesla more of a leg up in the event, some of the EV credits and some of the things that, maybe help Tesla, is it going to hurt other automakers more than it's going to hurt Tesla? I don't believe that's true, only because the only person winning is Tesla. The only person it seems like is viably trying to compete is Tesla. So, at that stage, I think it hurts Tesla more than the others, not in terms of their lead in regards to the EV race. Of course, it hurts everybody in regards to the EV race. In terms of what I mean by that is in terms of it hurting the stock price itself, because if we see demand go down some or stay flat or stagnant, that hurts Tesla far more than it hurts legacy auto, because legacy auto doesn't really have anything in EVs anyways. And even when they do, the companies that do have an EV product, they lose money on that product. So it's almost like, why would you want to sell something that you lose money on? Like, if anything, you want that to kind of go down and die and go away, so that way you can sell something else anyway. So, in terms of that narrative right there, I don't necessarily buy that necessarily. I think if, hopefully with everything else going on, that we just kind of get to kind of maintain the status quo with EVs, which then Tesla can roll right along, no problem. Obviously, if the EV credits are taken away, if some of the other incentives to buy Tesla are taken away, does it hurt Tesla? Yes. Does it hurt Tesla long term? Not really. At some point in time, those incentives were all going to go away anyways. It just may make the pace a little bit slower, this year, maybe, in regards to that, at least until we get some, relief on interest rates and some other things like that, to where people really are comparing apples to apples now in regards to, do I want a Tesla and move in the EV direction, or do I want to still continue on with, traditional gas powered autos?
Okay. And generally speaking, then, does Tesla serve as a barometer for this group, or if they are starting to look at new revenue sources from the robo stuff that they're closest on, and then the trailing numbers most supported by their energy credits? I mean, are they like separate even from EVs?
I mean, they certainly help, right? So now the renewable energy installation is going to add billions of dollars to revenue. So that's becoming sizable, right? Before it was mostly EV sales. So that's capturing analyst attention. Other than that, there's no major revenue stream that could impact revenue in the short term. I think analysts are going to be looking for any updates on FSDs, updates on robots, which we got today. So basically, I'm not sure it's gonna make a big difference at this point in time.
Okay.
Yeah, unfortunately, I have to agree with the guy there. I don't think there's anything that's going to impact today. Now, remember, a lot of times when we're talking about Tesla, sometimes folks are talking about something impacting Tesla in 2025, 2030, in some cases. I'm not debating those. I'm saying currently now in the current quarter, and again, I'm viewing this through Wall Street's lens, there's not a whole lot that's there. Hopefully, energy can come through with significant enough margins to really kind of help out with the bottoming process of the margins themselves and help out with that EPS number. We just don't know what the impact of that is going to be yet. So obviously we'll find out today. It'd be awesome. But until then, there's nothing else. It's not like FSD is magically going to add all this money to the bottom line this time around. I've heard that one before. I've heard robotaxi somehow is going to add, trillions to the market cap today based upon what I don't know. One day, maybe. Definitely there, but until we have timelines and actual guidance, it's not anything Wall Street's even considering, much less putting in their valuation models to buy the stock today or continue to push it higher. So definitely something we've got to consider there and something we got to keep in mind.
Your guys' cars fund. Tesla still big chunk?
Yeah, definitely. Tesla is one of the top holdings, but all the EV sector declined a little bit in the top 10. Because of the decline in stock prices that we've seen this year because of lower demands. So we're seeing now battery companies and at the kind of at the top of the holdings list now, but that changes with time. But with cars, you get exposure to all the ecosystem within the EV, not just the EV makers like Tesla, but also the EV components, the batteries, the raw materials, the charging company. It's a really well put together fund for investors to invest in the EV theme for the long term.
Okay. Hey, KARS, by the way. Let's talk Rivian specifically for a moment, Anthony. It seems like they are kind of emerging as the realist Tesla competitor here, outside of like the main legacy GM, Ford, etc. Is that a fair description, you think?
There it is right there. Let's see what they have to say. There's the competition that we keep hearing about, right?
It's not. I don't see it as a head-to-head competition. Rivian is competing in the pickup segment, whereas Tesla's more on the crossover and sedan type of segment, mass auto segment. But it's definitely a new exciting company that kind of reminds us of Tesla when it first started. It has a much bigger potential, I think, today than especially with the new investment from Volkswagen. Their cars continue to be really highly rated, highly desired. They continue to build production, although at a slower pace than we expected from last year. But they're humming along. I think this new investment from Volkswagen is a validation to the strength of this company, strength of its technology, that is even desired by Volkswagen.
All right. So when somebody doesn't have a whole lot to say, they use things like that. It's highly desirable. Well, based on what exactly? Oh, it's a great product. Well, based on what exactly? When you start hearing very vague sentences like that, that's how you know somebody doesn't have a whole heck of a lot there. If there's this intense demand and highly desirable, there would be more demand than supply, obviously. And then more importantly, you would have the money to be able to charge more, to raise prices, to then increase production, increase all those sort of things, continue scaling out. You would not need outside investment to continue to scale at that stage. I'm not saying you wouldn't take it, but you would not need it in order to do that. Is VW reaching out because they go, ooh, well, Rivian's best in class. We could do it ourselves, but let's just partner with Rivian. Or is it simply because VW is desperate and they're trying to get in the EV race, especially, with Europe and some of the other, concentrated markets for VW moving in the EV direction, and they're not being able to scale and move quickly or efficiently enough or even profitable enough. So they've got to partner up with somebody else. I don't know. Kind of tell me as to what you're thinking there in regards to this. So whenever I hear something like this to me sounds much more like somebody trying to create a competitor for Tesla, but there really isn't actual factual data there showing that there is any tangible reason to think Rivian can compete with Tesla over the long term. Now, I'm not saying Rivian's going to go bankrupt or anything else like that. Just to say it's a straight competitor and not something else is not exactly being honest either. It's not like Rivian's new and exciting. They've been around for a little bit now, and there hasn't been a whole lot of action in regards to Rivian in terms of actual, one, just able to scale, two, demand, and three, and more importantly to me, a path to profitability for Rivian. I just don't see it at this stage. So how is that a competitor? I don't really know at that stage. Let's see if he's got anything else, but I don't really see it here. But sometimes this comes up because Wall Street's looking for the next trade, i.e., they felt like they've gotten their money out of Tesla and they're looking to trade into something different and pump it up. We've seen this game from Wall Street before. Not saying that's what's going on here, but it sounds awful suspicious like it kind of is.
For cars like Porsche and Lamborghini, they're going to be using the same technology. And, I think the focus should be now on producing this new R2 vehicle but towards the beginning of 2026, which could be a game changer for the company. I really like Rivian. I think it could easily be a takeover target for other automakers.
All right. Good stuff, Anthony. Thanks for the analysis.
Okay, so we'll stop it right there. He kind of said it maybe is a takeover opportunity. That's not competition if you're in the running to be taken over by another automaker. I don't know how else to say that, guys. That is not a sign of a strong company that has massive growth coming in the future. It's just not. So this is another, I hate to call it typical Wall Street, but that's exactly what it is. These are the type things that they go off of. These are the type hopium type things that they do not only with a company like Rivian, they've done it with Tesla in the past as well, pumping up things that they know aren't going to generate revenue for years into the future and knowing full well they're not willing to pay for that as well into the future, but yet they'll talk about it, run it up, and then, obviously it'll get beaten down and then they'll talk about all the negatives. And it's kind of a rinse and repeat process with these Wall Street guys. So in regards to Tesla stock and regards to these earnings, we discussed that on just the video before this one in regards to my earnings thoughts there. In regards to Rivian somehow impacting Tesla stock price, it just doesn't, guys. There isn't anything there. There's nothing to be worried about whatsoever. I'm far more worried about the valuation on Tesla right now and them not being able to turn around the EPS story and those margins. That is much more of a concern for me. Short-term concern, not long-term concern. Short-term concern. Let me be very clear there. It's a short-term concern. That's much more of a short-term concern than Rivian. And long term, that's not really a concern for me at all at this stage, unless Tesla can't turn it around. That's a whole different story there. I don't think that's going to happen. But that still, to me, is more plausible than Rivian somehow being a massive competitor to Tesla. Just saying. That's just kind of facts in regards to what I see out of Rivian at this stage. Maybe they get there one day. That'd be great. But then this guy wouldn't be talking out of both sides of his mouth saying, hey, it's a viable competitor, but they're also a takeover possibility over here on the other side. You can't have it both ways. It's either a performer or it's not. And I think his true thoughts came out right there at the very, very end, and they glossed right over it and they moved right on to the next segment. And remember, if you want to watch this earnings call, make sure you check out the pinned comment down there. Take advantage of the little treat that I may have left there on my website for those of you guys that want to jump on during earnings season, be a part of my group where you get complete breakdowns and analysis of a variety of different earnings for a variety of different companies. You can ask me anything you want in real time. See my complete watch list with price targets. See all my buy and sell alerts. So if somebody goes bonkers over earnings, you don't have to figure out, hey, is Luke buying, not buying? Yep, you get to see all that in real time. See all of our members' buys as well. Some of them do a lot better than I do in regards to, I won't say timing the bottom, but in regards to getting a great price. You get 5 free courses. You get access to the best 6, 7, and 8-figure Discord out there. We got free coaching. We got a free stock analyzer tool you can use. Guys, there's so much involved. Check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.